What is going on, everyone? My name is Jeff, and so as we have started off in 2019, something that has kind of been on my mind is what's going to be the stronger investment, this year. Is it going to be Alibaba or Amazon? Okay, so I just wanted to make a quick video about this, and obviously, guys, the best way to play this e-commerce duo is to just own both of these stocks on some level. And so 2019 has started off a whole lot more bullish than the end of 2018. Go down to the comment section, guys, and tell me, which company do you think is going to perform better in 2019, Alibaba or Amazon? I'm really looking forward to some of these comments. So I think the first thing we all need to kind of establish here is that Chinese stocks in general had a terrible year due to the trade war, but we're also seeing pretty much all stocks having some kind of either direct or indirect effect from the trade war between the United States and China. 2018 was terrible for Alibaba, and it was pretty good and solid for Amazon. So going back to June of 2018, Alibaba was trading well over $200 a share before the effects of the trade war really started pushing all these Chinese stocks down, and Alibaba got as low as $130 in December. So it lost nearly $75, almost $80 of value off the stock price, okay? But if you want to kind of look at this objectively, from the start of 2019, Alibaba has performed great. Like I said, on the 3rd of January, it hit $130 a share, and now, after today, Alibaba is currently trading at $170. So from that big dip, guys, Alibaba is up 30% since then. But here's the thing about it. I don't think Alibaba is necessarily trading up from these lows, off of real stock movement. I think that Alibaba is just trading back up more towards fair market valuation. I mean, guys, let's face it, Alibaba is a $200 per share stock that has just been held down over the past 18 months. And of course, what are we all kind of waiting on? We're waiting for President Trump to come forward with details of the trade war, and that could send stocks parabolic, especially some of these Chinese companies who have got hit in the hardest. Now, meanwhile, while Alibaba was struggling in 2018, guys, Amazon was thriving. Around a year ago, Amazon was trading around $1,480 a share. But we all remember that epic run over the summer where they traded up over $2,000 a share, where they actually accomplished the $1 trillion market cap that they held for a very short period of time until the markets corrected back in October, and Amazon lost a ton of value really quick. Like I said, trading down around $1,300 a share, and now it has bounced back about $300 a share, and sitting currently at $1,627. But if you want to look at what Amazon has done year to date, and guys, they've basically traded sideways since the start of the year. They did dip down around $1,500 a share, and while it seems like most of the other big tech companies are gaining that level of performance back, Amazon seems to be trading sideways and has really lacked the big explosion that we're used to seeing from this tech company. Keep in mind, guys, over the past 5 years, Amazon is up close to 400%, and was sitting neck and neck with Apple when they both touched the $1 trillion market cap. So this is very, very interesting thing. Alibaba is off to a much stronger start in 2019. They're kind of leaving Amazon in the dust, but meanwhile, Amazon's not seeing a whole lot of movement, having a difficult time regaining that big, massive market cap that they had back over the summer. I guess the thought that kind of runs through my head every time I get some extra funds in my M1 Finance account is, where should I stick these funds? Should I stick it in Amazon or should I stick it in Alibaba? And I usually kind of break that money in half and try to do a little bit in both. If I was forced to make a decision, make a call on this, so not only did Alibaba get beat down from the big market correction, they've also been beat down from the trade war. And in my opinion, I actually think Alibaba is set to outperform Amazon in 2019. But that's just my opinion. I could be wrong, and I'm really excited to hear what you all each think about it. And so this is something else too that might catch your interest. Guys, this is a newly launched ETF. It's only been around since July of 2018. It's ticker symbol ONLN. And so I'm going to read you the fund objective is that it's to track the performance of the ProShares Online Retail Index, okay? And so guys, the reason this fund has caught my attention, it is very affordable, trading in the $30 range. I really kind of like how this fund is set up. Okay, so you're getting 25% exposure to Amazon, you're getting almost 15% exposure to Alibaba, and then you have a lot of other little up and coming companies like Chegg, Groupon, Netflix. Of course, Netflix is not an up and coming company, but you got Wayfair and Etsy, eBay, Nutrisystem. Like I said, one share of Amazon being $1,600 plus, and one share of Alibaba costing you $170. Well, this would be a way to stick both companies in your portfolio on a very affordable basis, okay? But I do like the structure. I do like that they have the mega cap companies holding the weight of this portfolio, and the more speculative stuff, you know, kind of averaged in on a smaller basis. So, like I said, ticker symbol ONLN. Make sure you go check it out. Man, I kind of feel bad about betting against Amazon. I'm having some regrets. I'm having some cold feet. I have lots of holdings of both companies in several of my portfolios. I think that's really the only way, you know, to play this right here is you just simply want to own both Amazon and Alibaba. But anyways, that's all I got for today's video, guys. I'm really looking forward to the comments. Please drop a like if you enjoyed this video, guys, and thank you so much for watching.